Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Monday, and it's kind of odd, but it is an end of the month on Monday. For some reason, I don't know, that seems odd to me. We usually don't end months on a Monday, but it is what it is. So really, pretty stellar performance. I would say from the indices. Remember, September was not a good month. I think September, I'm going from memory here, but I think SPY S&P was down about like 8 or 9% for the month of September. So we've rebounded quite nicely. I see on my spreadsheet here that we've got performance that looks like it's up about 8% for the month, and even better for the mid caps and small caps. You certainly heard me talk about them quite a bit. And then underperformance for the Qs, that is going to be really interesting as we go forward. Are we going to have a market where you're going to just get different areas that outperform? For example, look at the difference between value and growth. Value was up almost 12% for the month. Growth was only up 4%. I mean, that'll be interesting to see if that continues, both on the small and on the large cap side. Will value continue to outperform growth? I think a lot of that has to do with interest rates. So, geez, there's a lot to talk about, right? The ARK Innovation ETF did squeak out a gain for the month, up 1%. The IBD 50 ETF, they do a lot of rebalancing. They were up about 7% for the month. So, there's your stats for the month. Again, pretty interesting. Maybe we start to see some things change. I sent out an article earlier today regarding, perhaps rates are more at a normal level. I heard someone else talking about this too on CNBC, but what I'm referring to is, you could look at basically, we could bring up the 10-year here, and you can kind of see where we are at this point. Oops. This is the 10-year. Yeah, this is the 10-year. And if you go back in time, right, this is not, comparatively to where we have been, right, this is a more normal level. So, this should cause, in my opinion, you have to kind of think about what this means for what kind of companies that we're going to see outperform. Clearly, if you go back and if you look, 4%, and again, it's a very, very fast move, what we've been exposed to over the last 6 or so months with this move in yields. But we're really just back to more of a historical normal area. And that does mean, like, to me, what that means, and I could be wrong, and we'll see how this goes. And by the way, I didn't read the risk disclaimer, but before I talk about what I think, everything that I am talking about is for information purposes only. The video is for education purposes only. But when you look at something like this, it probably means that some of the really speculative things that we've seen going back to 2020 and 2021, SPACs, NFTs, right? All kinds of, crypto securities that, may have just been invented over the last couple of weeks, and they go up, right? It's just story stocks, right? We saw that was a big theme the last couple of years, before we got to 2022. You had a good story about a stock, it didn't matter what the valuation was, right? If it was, for a while, we saw things that if they were mentioned on CNBC, the stock would go up for no reason whatsoever, other than it was getting a mention on CNBC. Right. So I am actually looking forward to, a more normal market where just things like that don't occur, where there's not that quite much speculation, right? And of course, we know all the saga with the short interest stocks. That shouldn't be either. There can be short squeezes from time to time, but picking stocks because they have a high short interest. They were talking about this on Benzinga this morning, which I agree. I think Dennis Dick was mentioning this. There's a reason why stocks have high short interest. It's usually because it's a crappy stock, right? I agree with that. It doesn't mean that there's not going to be a short squeeze from now and then, but in any event, I'm getting a little bit off track, but I am actually looking forward to this type of market where it should be more about, the strength of earnings and their, a company's sales growth over quarter over quarter, right? Those are more appealing things to me versus, some of the things that I just went over. And I think when you see a move up in interest rates like this, getting us off 0%, you're going to see, I think, a more, a market that is not filled with as much speculation. Now, we can't rule out all speculation. There's products which I've had a few people ask me questions about, such as these products where now there's options that expire every single day in indexes. So there's always going to be that speculation, and especially even when they went for a while, it was mainly monthly options, right? And then that moved to weekly options, and now we have for indexes, options that expire every day. So yes, that's going to fuel some speculative fire. But if you don't have those crazy types of moves, then you may see the volumes die down in those a little bit eventually once they become, less new. But for now, people are using them. So in any event, right? Let's talk about a couple other things because again, today, I'm talking about month performance because today was a very quiet day. There wasn't a huge move in most stocks. They kind of just oscillated around a range. If you want a reason for that, it's probably because we had such a huge day on Friday. Also, last week's performance in general was pretty big, and now we've got a big Fed meeting that's coming up Wednesday to decide what might be the future path of further tightening. So, and to see if there's any changes in that. So of course, it's funny because I've seen a lot of analysts, Goldman Sachs came out yesterday, I believe it was released yesterday, that they think that the Fed funds rates is only going up to 5% in March. I mean, this is laughable stuff. This is what Fed fund futures are pricing. So we can all do that, right? I mean, I have a Bloomberg screen up here, and it tells me what Fed fund futures is pricing in, right? Unless Powell comes out and says something different, which he has the opportunity to do that on Wednesday, right? And the press conference will be at 2:30, after the announcement at 2:00, he could change this timeline. He's done it already, and we've seen it happen before with the change in like what's been going on with the CPI report. Remember, a few months ago, we thought that we would be done with tightening by close to like the end of this year. But what's happened is inflation has stayed stubbornly high, and we've basically we've lost ourselves a couple of months, and and the interest rates look like they're going to continue to go into the beginning of next year. Now, of course, one of the things, and if you're a regular viewer of my video, you know that we've been talking about this now since for the last few weeks, because this really hasn't changed that much. So again, it's kind of like I said, it's laughable to hear these brokers come out and say, "Oh, we think this." You're just reading they're just reading what Fed fund futures are saying. So again, we're going to get 75 basis points, which is going to give us a rate of 3.8%. Most likely, we're going to get another 50 basis points for the December 14th meeting. That takes us to 4.4. And where these brokers are getting 5% is from right in here, right? Then the rates really slow down to another 25 basis points, and then possibly another 25 basis points somewhere in here in March. But again, this is subject to change. It will change based on if we see inflation start to move down, or if it stays stubbornly high, or if some other event happens. But right now, this is what we're currently pricing in. So that's going to be really big for Wednesday. And if we go back to this price action for today and kind of look at this for the day, you could see that we really didn't go anywhere. We explored upper levels. It seemed like there was a headline or two that brought us down, where we were trying to basically move higher here at around 11:55 about some political stuff, but overall we really were flat base for the session. And I even said, I give these market audio files, and I even said at around 1:00 today, I don't think there's really going to be much to really do for this afternoon, because the price action is just too tight. And that may very well be what it is tomorrow too. because I don't think at this point really anybody's going to really want to go out on a limb, unless they know something and really push this market one way or another. Now, there could be some profit taking after this move that we've seen. That's possible. But I don't know if there's going to be really any major buying going on into the meeting until we get, some type of a picture from Powell about what he's expecting for the rest of the year. I think if he reaffirms this type of a view, right, one of the points that I was making in our member weekend video was that this market seems like it wants to drift higher to some extent. What's preventing the market from doing that is the Fed doing further tightening. The further that they want to tighten, the more of a headwind it is for equities. And people are just not going to want to aggressively buy into that at this point. Now, going back to the overall level of interest rates, right? It may be some things, and we've seen, what gets me kind of excited is, looking at what financials have been doing, right? This is a chart that really, financials haven't really been performing too much, but, we might get to see a move, back inside value for the XLF ETF. And we might see some other areas outperform. Now we've talked about some of those areas, so I'm not going to go into major detail, but, I'm excited that we've got just 2 more months of 2022, and again, I will send out a member video a little bit later about a P&L recap for the month. But I finished up about in my trading account up about 5% for the month. That's fine. I didn't have, for the most part, I kept a pretty high cash balance in my trading account, mainly about 80 to 85% cash. So I deployed some capital into some swing trades, but that's how it's going to be until really the indices get back into uptrends, and we know a little bit more about what the Fed, when the Fed is basically going to stop tightening, and when we've got a better picture on inflation. But really reviewing at this point, thinking about how you're going to trade, because before you know it, this year is going to be over, and deciding what your goals are for next year. I think it's going to be a fun year. I do. I know that there's different views on different ends of the spectrum, but I think that there's going to be some good trading opportunities if we are, again, barring anything really new, the tightening should begin to end, very soon. Once we get out of this year, it's really like that's basically it. We might get another 25, 50 basis points according to this pricing. And then we might be just at that normal rate of what historically Fed fund futures have been at, around a 4%. So again, that's going to change some things. There are going to be some, I know tech, and we just talked about Qs and the underperformance, but that doesn't mean every tech company is going to underperform. I think that there's going to be some good opportunities in that group, but I think it's going to be a lot more selective going forward, right? It's not going to be companies that have 40 times sales, right? Price to sales ratio, right? It's going to be like a company, it's going to be companies like SMCI, right, where the PE is a 10, a 12, right, and they keep churning out really good quarters. So it's going to be names like that. It's going to be could be medical devices, provided that the PE is less than a 50. We've certainly seen all kinds of things where the PEs are where companies aren't even making money. So again, I'm excited for a more normal market. And I will be entering the U.S. investment championship contest again next year, and I'm ready for that. I look forward to that challenge, and yeah, so that's I'm going to kind of wrap up October with that. I would say just one other thing for the day in terms of if you're looking for a couple charts for me, I was actually looking for energy trades today. Because they really didn't. That was the one sector that didn't perform. I think that there was some profit taking after some big moves, but overall, so here's how I traded today, and I thought today was pretty neat for me. I managed to make some money in a difficult tape today, and I think that's going to be how it's going, how it's going to go going forward is, finding where there's some relative strength and some plays, like a CALX, right, which had good earnings. These are names that I want to go back to. So I managed to take a couple, quick target in here, and this one, AXNX, right, which I didn't, actually reported earnings and is down, right, but that's why I got out of it. Was patient with this. I think I added the one day it sold off, and managed to get this trade off today at 75 bucks. So again, this is what this, if it has to be shorter term swing trading, we'll tighten up the time frames if we're not getting really good trends. But I think that, like I said, I think that there will be very good opportunities. All right, guys, that's it for today's video. So again, happy Halloween, happy end of month. Members, you could look out for a video from me either later tonight or possibly tomorrow with some of the takeaways for October P&L in my trading account. All right, guys, have a great night. See you tomorrow.